Hey there, and welcome back to our channel. If you're new here, I'm Your Name, and today we're diving into a crucial topic for anyone looking to invest in real estate. How do you compare real estate deals effectively? Whether you're a seasoned investor or a newbie, understanding how to assess and compare real estate deals can make a huge difference in your decision-making process. So, grab your notebook and let's get started. Before we jump into the nitty-gritty, let me ask you a question. Have you ever felt overwhelmed by the number of real estate deals out there? It can be a jungle. But what if I told you that with the right approach, you can simplify this process and make informed choices that align with your investment goals? Let's explore some effective strategies for comparing real estate deals. First off, the key to comparing real estate deals effectively involves understanding a few fundamental metrics. The most common ones include cash flow, ROI, and cap rate. Let's break these down one by one. Cash flow is the net income you bring in from the property after all expenses are deducted. It's essential because positive cash flow means your property is generating income. For example, let's say you're considering two rental properties. Property A generates $2,500 a month in rent, and your expenses, including mortgage, taxes, insurance, and maintenance, total $2,000. That gives you a cash flow of $500 per month. Property B, on the other hand, brings in $2,200 a month in rent, but its expenses are $1,800, giving you a cash flow of $400. At first glance, Property A seems like the better deal due to higher cash flow. But cash flow alone isn't the only thing to consider. Next, let's talk about ROI, which is a measure of how profitable an investment is. It's calculated by dividing the net profit by the total investment cost and then multiplying by 100 to get a percentage. Imagine you invested $50,000 in Property A and earned $6,000 in cash flow annually. Your ROI would be ROI equals X 100 is equal to 12%. For Property B, let's say you invested $40,000 and earned $4,800 in cash flow annually. ROI equals X 100 is equal to 12%.
In this case, both properties have the same ROI, making them equally attractive from that perspective. However, the cash flow from Property A is higher, which might be more appealing for someone looking for immediate income.
Lastly, we have a cap rate, which is calculated by dividing the property's net operating income by its current market value. The cap rate is useful for comparing the relative value of real estate investments. Let's say Property A has an NOI of $24,000 and a market value of $300,000. The cap rate would be cap rate equals X 100 is equal to 8%. For Property B, with an NOI of $18,000 and a market value of $250,000, cap rate equals X 100 is equal to 7.2%. Here, Property A has a higher cap rate, indicating it potentially offers a better return relative to its market value. Now that we've covered these key metrics, how do we effectively compare multiple deals? One method is to create a comparison chart. List the properties along with their cash flow, ROI, cap rate, and any other factors that are important to you or like location, property condition, and future appreciation potential. For example, you could create a simple table like this: property cash flow, ROI, cap rate, location condition. A, $500, 12%, 8% suburb. Good. B, $400, 12%, 7.2% urban. Fair. C, $600, 10%, 9% rural. Excellent. This visual representation makes it easier to compare and contrast at a glance. Lastly, it's essential to consider your own investment goals. Are you looking for short-term cash flow, long-term appreciation, or perhaps a mix of both? Tailoring your evaluation to your unique objectives will help you determine which deal aligns best with your strategy. So, to recap, when comparing real estate deals, focus on key metrics like cash flow, ROI, and cap rate. Use a comparison chart to visualize the data and always align your decisions with your investment goals. If you found this video helpful, don't forget to hit the like button and subscribe for more valuable insights into real estate investing. And if you have any questions or personal experiences to share about comparing real estate deals, drop them in the comments below. Thanks for watching. and happy investing.